Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, February 5th. U.S. employment gains slowed more than expected in January as the boost to hiring faded, but rising wages and an unemployment rate at an 8-year low suggested today that the labor market recovery remains firm. The unemployment rate slipped to 4.9%, the lowest since February 2008, the Labor Department said today. U.S. stocks turned negative after the data as investors wondered if these numbers would encourage the Fed to raise interest rates in March. Now let's look at three charts that could give us some insight into how the market's going to feel during the coming week. First of all, we're going to look at our trusty daily chart of the S&P 500 Spider, symbol SPY. As you all know, this is the tracking stock or ETF that closely follows our S&P 500 index. Now, we know that since the prior high here on December, at the last week of December, the SPY made a high of $207.79. which would be around 2077 on the S&P 500 itself. Well, that was all she wrote. The S&P has been going down really dramatically, as you probably know, since the first of the year. Came all the way down to our low point here on two Wednesdays ago to 181. That's about 1810 on the S&P 500 itself, and a fall of about 13%. Now, in the last couple of weeks, as we've been tracking the SPY, we used Fibonacci lines, and we learned that there was resistance at 191. We learned there was resistance at 195. The SPY managed to climb up to 195, which of course is about 1950 on the S&P 500 itself. Managed to do that actually about this Monday, then started lower again. Now we're in a downtrend here, actually in a soft bear market here. What we want to see on this pattern, we want to, of course, for all of us bulls, we want to see this market move higher here. We can see that right now, as I captured this chart, the SPY is trading at $190.10. It is trading just at its 20-day moving average, the red line. The way it looks today, I suspect, don't know for sure, that it could fall below that. We also know that it is trading to quite a discount, the SPY is, to its 50-day moving average and its 200-day moving average, which is plotted high overhead. Now, if many times when price makes a low on any asset, price likes to retest part or all. Watching the SPY closely here, the S&P 500, to see if it can hold up. Let's see if I can draw a straight line here. If I attempt to draw a straight line, I'm trying to head it over here to about 187. This is our next potential support here is at 187 or 1870 on the S&P 500. So if we lose more ground in the coming week, if the SPY moves down here to about 187, then hope is not a strategy, but let's hope it stays above it. If it does not, if it breaks 187, if it breaks 185, then it may need to head back down toward 181. All of that will, of course, have an impact on stocks. Many of them follow the S&P 500. And this could be something that could keep stocks going lower. So we need to be wise here, be very, very conservative in our trades, especially our long ones, until we can see if the SPY can rally again. Of course, as many of you know, our markets right now are correlated more or less, mostly more, with the oil prices. So if you watch the USO, that's an exchange-traded product that will show you where the prices of West Texas Intermediate are moving. So again, we have support here at 187, support at 185, and then finally our potential support down here at 181, where we really need the SPY to hold. Our next chart here is a chart of the iShares Russell 2000 ETF, symbol IWM. Excuse me. This ETF follows the Russell 2000 Small Cap Index. We haven't looked at it in a couple of weeks, but I want to. The IWM is actually a leading indicator for our broader markets, as small caps many times act as just that. We can see that the IWM is looking very weak right here. It's come down very definitely in a bear market move, and a downtrend has actually been more or less in a downtrend since July of last year. It looks very weak here, and that's why I have more pause here over the S&P 500. I'm a little worried about the IWM. We see it made a bear market flag here last week, this week, and last week, but now, as of today anyway, that flag is being broken. Support on it is broken slightly, but let's see. We're going to have to see if it continues heading lower here. If it does, that would be a negative for the overall markets. Now, as I captured the IWM today, it was trading at $99.74. If it has to break lower here, this low reached back here in the middle of January was at 95. That is the potential support line that we are looking at here. It's important for the health of the IWM, the health of small caps, that it stays above this number. Of course, small caps don't particularly like higher interest rates. That may have something to do with it, but it does look like there's definitely weakness coming into this, and we're going to have to see how this fares as well next week. Now, our final chart has a little more good news to it than the other two. This is the S&P, the Spider S&P Metals and Mining ETF, symbol XME. This is an equities ETF. Things in it and pays a yield, if you're interested in being in it longer term, if it works out, of 2.73%. 24 holdings, as I said, including the top ones: Consol Energy, Newmont Mining, Steel Dynamics, Reliance Steel, Hecla Mining, AK Steel, companies like that. Companies involved mostly in the production of steel, gold, diversified metals, and mining. There's a few coal companies in it. One would think, after looking at 2 years of selling off basic materials, and in this case the metals part of the industry group of metals in the basic materials sector, maybe it can finally make an attempt at reversing. Now, in the last quarter low here in January, the XME was $11.38. Now, today it's back up. It's traveled up in the last couple of weeks. Of course, we've seen gold move higher and some aluminum stocks like Alcoa. We see it trying to move higher here. And as I captured this chart, it was trading at $15.09. What we need to see here is if the XME can actually reverse, is the definition of an uptrend, is higher highs and higher lows. So just like the S&P, which moved up and could we also have a single pivot here, a little more gentle on the XME. I'm going to keep an eye on the XME and see if it makes a reversal here. We had really high volume coming into it on Friday. Yesterday, Thursday. So it's trading above its 20-day moving average, the red line, and its 50-day moving average right now. As a trader, I'm looking for it to pull back here in the next couple of days, maybe down to around the 13 area. So I'm looking at a potential entry here, a long entry, somewhere between 13 and 1550. I'm going to keep an eye on it here. The RSI here, the 14-day RSI, is actually short-term overbought here in overbought territory. The MACD, however, longer term does look, MACD is a longer term indicator, does look positive here with the MACD line coming up to the 0 line, which many people consider to be a buy when the signal line crosses above the 0 line. So short term, I'm looking for a pullback. Longer term, I'm looking for this to possibly move higher. So you may want to keep an eye on the XME as we move into next week. See if it can make a higher low and then start higher again. Okay, now we'll go on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity for you to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. We have blessedly few economic reports coming in being issued in the coming week. Wednesday is crude inventories. Thursday is weekly jobless claims. Friday is retail sales, business inventories, and the Michigan Sentiment Report. We are through the bulk of earnings season, although most large cap movers have reported, we still have some companies to issue earnings. You will want to be aware if companies in your portfolio are announcing. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.